What if I told you that the world's first financial empire wasn't built by kings, conquerors, or colossal armies, but by a city of merchants who turned money itself into power? Imagine a city so clever that it became the Bank of Europe, controlling the flow of gold, trade, and debt while remaining untouchable by war. This is not a legend, this is Venice. And in the next 100 minutes, you'll discover how a city of islands transformed into the ultimate money empire, setting the blueprint for modern banking, and how its lessons still shape the world today. Venice was never meant to be the financial capital of Europe. Built on a swampy lagoon, surrounded by water and peril, it could have been just another isolated settlement lost to time. But geography, as often happens in history, became opportunity. Surrounded by the Adriatic Sea, Venice was perfectly positioned for trade between East and West. Merchants arriving from Constantinople brought silks and spices, while northern traders carried timber, grain, and wool. Venice wasn't just trading goods, it was trading influence. The city's rulers, the doges, understood early that power came not from armies but from money. To secure trade routes and manage growing wealth, Venice began creating systems of accounting and credit centuries ahead of its competitors. Merchants didn't just exchange goods, they exchanged bills of exchange, letters of credit, and promissory notes. Suddenly, Venice became not just a hub of commerce, but a hub of financial innovation. Yet, this rise wasn't smooth. Rival cities like Genoa and Pisa sought dominance over Mediterranean trade. Pirates and political rivals threatened the lifeblood of Venetian commerce. Every merchant knew that a single sunk ship could spell ruin. The challenge was clear: how could a city protect its wealth while expanding its financial reach? The answer came in the form of organization. Venice developed the Arsenal system, a network of shipyards capable of building and repairing vessels at unprecedented speed, ensuring trade and military security. At the same time, the Venetian Senate created a strict regulatory framework, controlling credit, loans, and the circulation of currency. By the end of Chapter 1, Venice was no longer just a city, it was a financial machine. Merchants learned that trust, contracts, and careful accounting could be more powerful than swords. Venice became the first city in Europe where money worked systematically, growing wealth exponentially and creating a blueprint for modern banking. With trade stabilized and wealth accumulating, Venice faced a new challenge: how to convert commercial success into political influence. Other powers, Italy's city-states, the Byzantine Empire, and eventually the Ottomans, could threaten its dominance. Venice's genius lay in leveraging its wealth as power. The city began offering loans to kings and emperors, funding wars and diplomatic ventures. In effect, Venice became Europe's banker, controlling not just trade, but politics and power itself. The system wasn't flawless. Loans could default. Wars could destroy fleets. Venice survived by innovating continuously. It introduced public debt, allowing ordinary citizens to invest in government bonds, creating liquidity for the state and spreading risk. The Monte Vecchio, one of the first state-backed bonds, made the Venetian Republic financially resilient in ways no other state could match. Wealth, once concentrated in merchants' hands, became a tool of statecraft. But money alone wasn't enough. Venice's leaders knew that secrecy and stability were key. They created a sophisticated network of spies, agents, and maritime insurance schemes to protect their investments and outmaneuver rivals. Every trade deal, every loan, every shipment was meticulously recorded and insured, turning the city into a fortress of finance. By the end of Chapter 2, Venice had transformed completely, from a swampy trading port into the Bank of Europe. Merchants and citizens alike understood that money could be more potent than armies, that trust could create empires, and that clever systems of finance could protect a city from the chaos of war. The Venetian money empire was born, not from conquest, but from calculation, innovation, and relentless ingenuity. By the 14th century, Venice had mastered not just trade, but the mechanics of money itself. The city's merchants realized that wealth was only as powerful as the systems managing it. They created what we could call the first modern banking practices: double-entry bookkeeping, formalized letters of credit, and transferable bills of exchange. Imagine a merchant in Florence wanting to buy spices from the Levant. Instead of transporting heavy gold coins across dangerous seas, he could now issue a bill of exchange from a Venetian bank, allowing the seller to receive payment in another city. This innovation drastically reduced risk and transaction costs. Money became mobile, flexible, and almost magical in its ability to grow influence without ever leaving the ledger. But this brilliance came with challenges. Fraud, defaults, and political instability could ruin entire businesses. Venice's solution was foresight and regulation. The Venetian Senate implemented strict merchant codes, mandatory audits, and accountability structures that ensured trust. Even in crises, like the Black Death, which decimated Europe's population, Venice's financial systems held. Merchants and investors trusted the city because they knew that calculations, contracts, and reputations mattered more than luck. Through this period, Venice didn't just grow wealth, it exported financial knowledge. Merchants carried these systems across Europe, influencing Florence, Genoa, and eventually the Dutch and English trading empires. Venice became not just a city of gold, but a university of finance, where the smartest minds of Europe learned to turn commerce into empire. Wealth is only valuable if it can be wielded. Venice understood that better than anyone. By lending to kings, emperors, and military campaigns, the city effectively turned debt into influence. European rulers, desperate for funds to fight wars or defend territories, came to Venice not just for money, but for strategic advice. This strategy transformed Venice into a financial superpower. Unlike armies, which could be destroyed, or territories, which could be lost, money allowed Venice to shape politics across borders without moving a single soldier. Financing a war meant controlling the outcome, negotiating terms, and securing trade privileges in return. It was influenced through economics, centuries before modern geopolitics relied on banks instead of battleships. Yet the path was perilous. Not all borrowers repaid their debts. Some loans defaulted, and political rivals sometimes threatened Venetian merchants abroad. Venice responded with innovation again, the first maritime insurance schemes, which protected both ships and cargoes, reduced risk for investors, and encouraged further trade. By combining legal frameworks, financial tools, and intelligence networks, Venice created a self-sustaining financial ecosystem, a city that thrived on commerce and calculated risk. By the end of Chapter 4, the Venetian model was clear. Money was not just currency, it was power, diplomacy, and survival. Venice had become a lesson for the ages. A city that started on swampy islands had turned finance into a weapon more effective than armies or fleets. By the 15th century, Venice reached its financial zenith. The city's docks were bustling with goods from Asia, the Middle East, and Europe. Ships arrived laden with silk, spices, sugar, and precious metals. But wealth alone didn't make Venice powerful, it was the ability to manage it. The Venetian government introduced state-backed bonds and lotteries, allowing citizens to invest in public projects like canals, fortresses, and fleets. Ordinary Venetians became shareholders in the city's prosperity. This democratization of investment not only raised massive funds for the state but also tied the population's loyalty to the city's financial health. Venice's stability became a magnet for trade, talent, and capital. Meanwhile, Venetian banks expanded internationally. Branches appeared in Constantinople, Alexandria, and Antwerp. Money flowed like a river across Europe, yet Venice maintained careful control. Every loan, bond, or credit note was meticulously recorded, and the city became synonymous with trust and reliability. Rivals like Genoa and Florence could match Venice in commerce, but they could not match its systematic financial power. No empire rises without challenges. Venice faced fierce competition from Genoa, Florence, and later the emerging Ottoman Empire. Pirates and privateers threatened its sea routes, while political intrigue in Europe sometimes delayed repayment of loans. Venice's solution was innovation. It perfected letters of credit, double-entry bookkeeping, and maritime insurance, tools that reduced risk, spread wealth, and encouraged trade even in turbulent times. Venetian financiers were often behind-the-scenes actors in major European events, funding wars, alliances, and political campaigns. Venice also developed an early form of centralized banking. Large sums of public debt allowed the city to finance both peacetime projects and military campaigns without destabilizing its economy. Money became both shield and sword, a lesson the modern world still applies Venetian ideas. Venice's financial innovations didn't stay in the lagoon. Merchants and bankers carried these ideas across Europe. Amsterdam, London, and eventually Paris drew lessons from Venetian systems. Concepts like state-backed bonds, maritime insurance, and transferable credit laid the foundation for modern banking. This chapter of Venice's story highlights an essential truth: the city's influence was intellectual as well as economic. Its methods inspired entire nations, shaping commerce, trade law, and financial systems for centuries. Venice became a blueprint, a city whose lessons transcended borders. All empires faced decline, and Venice was no exception. The rise of Atlantic trade routes, dominated by Portugal, Spain, and later the Dutch, gradually shifted wealth away from the Mediterranean. Venice's monopoly on eastern trade weakened. However, Venice's financial systems endured. Even as political power waned, its banking methods continued to influence Europe. The lesson was clear: strong financial institutions outlast empires, because while armies fall, systems of trust and credit persist. Venice teaches a timeless lesson: money is more than currency, it is trust, innovation, and foresight. Modern banks, investment systems, and even global trade networks owe much to the principles perfected in this lagoon city. Risk management, diversification, public investment, and international credit, all staples of modern finance, were refined in Venice centuries ago. Financial power does not rely solely on wealth, it relies on systems, governance, and the ability to turn money into influence without destabilizing society. Venice shows us that financial intelligence can shape politics, security, and culture just as powerfully as armies. By the time Venice faded from political dominance, its lessons had traveled across Europe. Its citizens may have returned to quieter lives along the canals, but the Venetian mindset, that money can be a tool for power, stability, and growth, remains. As we navigate today's global financial systems, stock markets, and digital currencies, we are still following the path Venice carved centuries ago. A city that began as a swampy lagoon had shown the world that financial ingenuity can build empires, outlast wars, and shape civilization itself. Venice reminds us that wealth without wisdom is fleeting, but innovation, trust, and foresight turn money into legacy. The Venetian money empire was more than a city, it was a masterclass in finance, one that continues to teach us that money, properly managed, can change the world.